You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Because I think everybody who was going to deleverage out of their miners already has. And as far as the gold price is concerned, I mean, I don't, like I said, I don't know what the catalyst would be, but I think the worst that could happen is the lows that we've seen in the GDX could be retested.
Thank you for tuning in to Mining Stock Education. I'm your host, Bill Powers. Well, a little over a week ago, we were checking in with the Junior Miner Junky, David Erfle. His website is JuniorMinerJunky.com, and that was after that panic Monday where everything sold off, gold was crushed, silver was crushed, miners were down, just extreme volatility. And at that time, David, welcome to the show. You had said to be patient, wait with cash in hand. There was so much uncertainty, but now a mere week or a little over a week later, do you look back and say that could have been the shakeout before the breakout?
Oh, yeah, it's pretty obvious that it was the shakeout. I mean, Bill, it's pretty incredible. If your listeners could bring up a monthly chart of the GDX, if you would have taken yourself and maybe your family on a vacation, maybe to a Greek island, and say, honey, let's get off the grid for a month. And at the end of February, and then you came back at the end of March, and all you had was miners in your portfolio, you'd probably be either up or not down very much, while the rest of the world has basically been torched. Their portfolios have been torched while the Western economy has been completely shut down. It's amazing. You just take a look at that chart, and there's just this big, huge, long hammer. And yesterday, on Wednesday, the GDX was actually up on the month. So it was just an incredible bear trap that most people got caught up into. And now it's gotten right back up to where it was before it crashed. And it's just a really good time to carefully scale it back into these things. But you just have to be careful on which ones you're scaling into. As far as I'm concerned, as far as what I was telling my subscribers for the past week or so, is I had three, as you know, Bill, because you're a subscriber, is I had three separate watch lists. I had a low risk watch list that had royalty and streaming companies on it, along with some low cost growth oriented producers, and then a medium risk watch list, which had developer explorers that were cashed up for at least until the end of the year, and more appropriately into next year as well, with that are proving up large projects that are either close to the finance stage or getting there. And then I had a third watch list, which is where the higher risk juniors are, the earlier stage companies, but they also need to be cashed up for at least the end of the year and in the next, because you do not want to invest in anything right now that needs to raise cash. I mean, I feel terrible about some of these companies. I have a lot of friends in the industry, Bill. I'm friends with a lot of people that run these companies, and they've done a great job running these companies, having a strong balance sheet, and having great projects and great people to prove up those projects. But if they were on the funding ledge right before this happened, if they were in the process of funding or needed to fund, they're kind of in trouble right now, because it's difficult, really difficult. It was difficult to raise capital before this happened, and now it's even more difficult.
What about Revival Gold? That was a stock you were in. I believe that they had to totally revise and reoffer a financing. What's going on there? Yeah,
that's another company. I love the management. Hugh Agro is brilliant. He's done a great job with this company, and they just issued an outstanding resource of about 3 million ounces in Idaho. And they needed funding right before it came out, and they were in the process. They issued a funding for $5 million, and they had to pull it and do a placement in the open market instead for only $1 million, and they're in the process of doing that right now. So once they've got the money, they've got $1 million. It's not 5 million. I mean, it might get them through a smaller drill program this year. I'm not privy to that. You'd have to ask Hugh, but it's just a circumstance that was beyond their control. And there's plenty of other companies out there like that in the same situation.
Dave, you were saying be patient last week, and you were also keeping your eye on the reflation trade because everything was so deflationary a week ago. Do you think that reflation trade is here in full? And how much cash do you have at this point after you've been buying miners? How much cash do you still have in your portfolio?
Yeah, I do. I do think that reflation trade is here, and it's being reflected in the marketplace. I've got a little over 20% cash right now that I'm going to keep for a while. I've scaled into a few things, and like I said, the things I've scaled into, I feel are the safest of the safe in royalty streamers and in growth-oriented producers and developers. And I have taken a flyer on a few higher risk early stage companies, but they are cashed up. Not only through this year, but into next as well. So the valuations were just too good for me to pass up. And like I said, I'm going to keep this 20% cash position for a while here and see what happens. Because we're still not out of the woods yet, even though it's really looking up for gold, and it's really looking up for our sector now that this bear trap has been set and caught many investors inside of it.
Do you think, though, that we could still see, as the Dow, it's been rising quite quickly the last few days, if we do get another sell-off and those people on margin need to rush to liquidity again, could we see the same scenario we saw, or now with what appeared to be a default the other day, although the COMEX didn't explicitly come out and say it, and the Swiss refineries and such shut down? Is it a different scenario already just a few days later, or could we get another sell-off, a double bottom or worse in gold and in the miners?
Oh yeah, the scenario is really incredible out there. I mean, you had backwardation in gold, you had all the refineries shut down. You have not only is the COMEX all computerized. There's no live pits at the COMEX. There's no live pits at the LME either in London, so it's all computer. So the gold price is going all over the place, and it's difficult to trade this market. You just want to scale into the companies that you feel that you've done the research on, that you feel that are safe to get into, that their balance sheets are strong and their projects are really good, and the jurisdictions they have their projects in are really good, and the management team's really good. So anything could happen here. I don't know what the catalyst would be. I mean, there's been so many surprises coming out for the past few weeks, but I see the worst case scenario on the Dow Jones, for example, would be that 15,500 area, which is where pretty much the mother of all support lines is, going back to the end of 2015, early 2016. It consolidated for a few years there, and then it has been taken off from there ever since. So all those gains being taken off the table is not out of the realm of possibility now, considering what's going on in the world right now. I'm not predicting that, but I am cautious of it. I mean, I had a 3 times long the Dow position that I'd put on Monday, and I took it off today and took the profit. I just don't know, nor does anybody else, what kind of catalyst would come out and do something like that. But there is a possibility.
So even if we did go down on the Dow and test that 15,500 level, you still don't think the miners and the precious metals would face deflationary pressures? It's inflation from here is what your expectation is.
That's a tough call. I think so, because I think everybody who was going to deleverage out of their miners already has, and As far as the gold price is concerned, I mean, I don't, like I said, I don't know what the catalyst would be, but I think the worst that could happen is the lows that we've seen in the GDX could be retested.
Would be like 19?
16.
Okay.
16. Yeah, it got to 16.
And then it closed above 26 on Wednesday, which you said
Right.
was a big deal.
That was a big deal, but if you take a look at the daily, that downtrend line is still not broken above, and I'd like to see 26 taken out on the weekly and then the monthly. That would make me feel better. If that happens, then I'd pretty much say that it's a pretty good certainty that the bottom is in. But God, just take a look at that monthly chart and that tail on the GDX. It just sure looks like the mother of all bear traps, and it's going higher from here. And I don't see it going any lower than maybe the 23 area.
We'll be right back after this word from our sponsor. Orin Resources is a junior exploration company with the appetite of a major, focused on finding the next globally significant discovery to create enormous potential upside for shareholders. It's one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits, and has a premier 7-project portfolio, including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. With Orin's unparalleled technical team and highly experienced management with a history of success in advancing and monetizing exploration assets, Orin has been called one of the best in the junior exploration sector. Orin trades on the TSX and NYSE under the ticker AUG. To learn more, go to aurinresources.com. That's AURYN resources.com. Dave, there's still so much uncertainty. You are a lot more certain than our conversation last week, but even as I look out there, there's so much uncertainty where countries like Peru have shut things down. There's mines in Canada and also all over the world that are shut down because of this. Nations are responding with quarantines, or states here in the U.S., your state, California, my state, Michigan. They have us on at least a 3-week lockdown. There's still so much uncertainty, but you're still confident jumping back into these positions because, especially with what the U.S. Congress is approving right now, trillions of dollars of bailout money. This all spells inflation and good for miners eventually, is your expectation.
Absolutely. Yes. I mean, they're committed to the Keynesian model, and that's exactly what they're going to do. They're just going to print as much as they possibly can and helicopter drop as much money as they possibly can to people who need it and reflate the system. Europe can't do that. They're pushing on a string. They can't they can't create endless amounts of their currency like we can, and they've had negative interest rates since 2014, and it's not worked. So I'm really concerned for the EU, but I'm really concerned for the U.S. as well, as far as inflation, as far as stagflation is concerned, and as far as people's jobs. I mean, the unemployment, the people that filed for unemployment today, the numbers that came out were staggering, and I have friends that are in this situation. I have some family members that are in this situation. It's just a dire situation, but they're gonna do the best they can to reflate this thing, and the beneficiary is gonna be gold and silver. So
and the U.S. dollar, do you think?
Oh yes, as long as this lockdown goes on and people need dollars. Most of the world's debt is denominated in dollars. So yes, I see the dollar going higher as the more people's debt is squeezed.
And then do you see the dollar reverting and heading lower as gold continues to soar, as some expect later on?
Against what? Against what? I mean, the dollar's measured against other currencies, and it's mostly the euro. So no, I don't see that. I mean, I think it's like 52% of it is the euro, and the EU is a basket case. I'm fearful that they're gonna introduce an electronic currency, and I wouldn't even be surprised if they did do that. They would digitize gold as well, because any form of money they want digitized so they could tax it. That's what all these governments want, So the EU would maybe put the euro on a digital, cryptocurrency. That That wouldn't surprise me. And there's been rumors of that happening. So any number of things can go down here with what's going on. So yeah, it's a good time to be cautious. But as far as gold miners are concerned and gold royalty streaming plays are concerned, and developers are concerned that have high grade projects in good jurisdictions and a lot of cash right now, those are things you can speculate in. Because let's face it, right now, if you want to buy some gold, you can't get any gold anywhere. So the next best thing is to invest in miners that have gold in the ground, that they're mining it at with very high margins.
Dave, last week you were working overtime, sending out alerts in the heat of the moment, and everything that was going on to your subscribers. And one of the things you stressed is that this is a very good learning experience. And as investors, we need to take note of what we're learning. And as you reflect upon the last week, so much was packed into 1 week. What were some of your key takeaways for your own learning?
Oh, yeah, absolutely. I mean, I've been working overtime for the past 3 weeks, Bill. So, yeah, it's the takeaways is basically have enough cash when you feel there's a crisis coming, because cash takes away the emotion out of your trading. If you have a large cash position, then you feel less emotional in the decisions you have to make in the moment. And a lot of people found out they didn't have enough cash on Monday, the 16th. So, when there's a crisis situation brewing, get that cash position up pretty high to where basically up to the sleeping point. There's an old Wall Street saying, you have enough cash up to the sleeping point, and a lot of people found out they didn't have enough on Monday. So that's a lesson that I've learned. That's a lesson that I think a lot of people have learned. And there's nothing wrong with losing money in the stock market. As a matter of fact, it's mandatory if you want to learn how to be a successful investor. So take this as a lesson. And if it was an expensive lesson, just make sure you get your money's worth.
And how do you deal emotionally, Dave, with missed opportunities or lost realized gains? Does it get easier as you get older, or do you still struggle for a few days afterwards regarding this?
Well, it does get easier as you get older, Bill, because you can't think about that. You can't think about the past in anything. I mean, you can't change it. So it's wasted energy. It's a wasted thought process. So what you do is you take the lessons that you learned from what happened to you and you apply it to the future. Like I've said to you and my subscribers, I feel very fortunate to have come out of what I feel the worst of the crisis with pretty much my investment capital intact. I lost some paper gains. That's not a big deal, especially when you compare it to what most other people have lost during this crisis. Losing paper gains, I could, that I'm not going to lose sleep over that. But if I had lost my investment capital, I would have been a little more upset. But losing paper gains, that's not a big deal, and it's nothing compared to what some of these people have lost, Bill. I mean, it's just terrible. You know what it's like out there, and I feel for them. I feel for their families. And all I can do is the best I can do for my subscribers and try to keep them in the loop and put out as many alerts as possible to keep them up to date and let them know that they're not alone. We're all going through this together, and to give them as much updated information as I possibly can.
Dave, on that note, as we conclude, I'd like you to share about the genesis of the Junior Miner Junky subscription, why you started it. There are some unsavory things that go on in the sector, in the newsletter writing business. You didn't want to be a part of that. And there, as I understand the story, there was demand coming from people that were reading your Kitco article saying, hey, I want more insights from you. So please share how you started this newsletter.
Oh, sure. Yeah, it's I started writing the column for Kitco in 2016. Right at the beginning of 2016, and I started to get a lot of emails from people saying that I should start a newsletter because they would subscribe. So I thought, if I'm going to do this, I'm going to do it right, because I've subscribed to a lot of newsletters in the past, And there are a lot of good ones out there, but there are a lot of other newsletters that aren't so good. So what I tried to do was I tried to take the best attributes out of the newsletters I respect the most and apply it to my own, and then bump it up a notch to where I'm completely transparent. All my subscribers know exactly what I'm doing with my money at all times, what I invest in, how much I made, how much I lost, warts and all. Everything is there for them to see. So it's basically also a teaching platform. I've done this for the past 19 years in this sector, and the most important thing is I teach them risk management tactics, which have been very beneficial into taking a lot of money off the table until this happened. I mean, I've done really well over the past 4 years, and the reason why I have is because I've taken a lot of profit. I mean, that's the most difficult thing for an investor to do, is to sell. I mean, anybody can buy a stock, but knowing when to sell and knowing when to take your profit, that's the really tough part of investing. So I try to teach my subscribers how to do this properly, and hopefully, they've learned something in how to invest and how to become a better investor when they cancel my subscription. And I've gotten so many emails, Bill, from people that have told me just that. So like I said, losing my paper gains is not that big a deal when I know that I'm helping other people out there navigate this sector and make money like I've done over the past 18 years.
David is someone excellent in this sector that you can learn from and get a ton of investment ideas. And part of the service is he'll engage you one-on-one with your questions. If you're interested in learning more, please go to JuniorMinerJunky.com. If you want to reach out to Dave, there is a contact form there at JuniorMinerJunky.com, and you can get in touch with Dave. Dave, as always, thanks for coming on the show, and thank you for your insights.
Thank you, Bill. Always great talking to you.